Chairman Brown, Ranking Member Scott, and esteemed members of the committee. Thank you for the opportunity to speak to you this morning. As CEO, I have the opportunity to lead a 211-year-old institution that supports clients in nearly 160 markets around the world. And we have 240,000 employees, of whom I could not be more proud to lead and more grateful to. Through decades of geopolitical shifts and technological advances, we have seen how the US banking system is truly unmatched. The isolated bank failures of the spring may have tested the confidence of our people in our industry, but I am proud of how our industry, including my peers sitting around me today, how we came together and worked with the government to affirm the underlying strength and stability of the system. As we chart a path forward, we need to make sure we don't inadvertently upend the very system and unique system that we have. Our financial system is the envy of others because it is underpinned by the most competitive banking system and the deepest capital markets. We're home to banks of all sizes, each with an important role to play. Collectively, our banks serve as the engines of growth, supporting businesses and households and promoting access to financial services in hard-to-reach communities. For American multinationals, global banks such as ours offer the size and scale to help them compete overseas without having to rely on foreign banks. We finance supply chains and partner with Americans' top companies to bring products and services to American consumers at affordable prices. We use our robust balance sheets to fund transformational projects. Last year alone, Citi worked with state and local governments to raise or finance nearly $31 billion in infrastructure investment. That included financing 35,000 affordable housing units across 32 states. That's our 13th year as the country's #1 affordable housing lender. And in addition, we provide a variety of products to drive financial inclusion and work with CDFIs and MDIs to reach the underserved. As a proud participant of the OCC's Project Reach, we are co-leading the work stream that's focused on strengthening MDIs. And we are also engaged in initiatives to increase access to credit and reduce the number of Americans who are credit invisible. The strength of our financial system becomes most critical when the outlook for our economy weakens. Although we certainly don't see a drastic downturn on the horizon, history suggests that a recession is possible given the macroeconomic factors at play. And they include persistent inflation in services, rising debt, and a slowdown in global growth, as well as two major conflicts in Europe and the Middle East. And we're beginning to see some concerning signs in the lower FICO score segment of our customers. And this is unfortunately the very same group that feels any tightening of credit first. Raising capital requirements by as much as 20% on an industry that all participants believe is well capitalized is a bad idea in any environment. But it becomes even more problematic with economic uncertainty ahead. Almost every element of the Basel III Endgame proposal would make lending and other financial activities more expensive, especially for smaller companies and consumers. The most likely result of increasing the cost of banks to offer a variety of products is that it would move more activity into the less regulated non-bank sector, which carries its own risk for consumers and the stability of the financial system. It would also diminish our industry's ability to compete internationally, especially with our European counterparts. I raise these concerns as I know we all share the same goal, that is of maintaining a strong and competitive banking system that supports a resilient economy. Thank you, and I look forward to answering your questions later today.
Thank you, Ms. Fraser.